Yeah, yeah, that sounds great. Oh, are we recording now?
Yeah, that's great.
I think I've done that before. I think I've
Markets are
done that.
perfect.
I think
Markets
I've
are
done
great.
that.
What's up?
Oh, look at
Dave,
that.
how you doing?
How you doing?
Good to see you,
Good to
man.
see you.
What do you think about Russian CDS spreads on the
Yeah.
ruble?
There have been people who are like, should I buy Russian stocks right now? They're low. There's a dip.
Buy the
Buy the
dip.
dip. Yeah.
Buy this dip, man.
Yeah.
You gotta have nerves of steel to buy this dip. No, I would not be buying this dip. I would not be touching any of this. I might be long
Yeah.
CDS if I could be, but I can't. No, this is the first, I think, economic war that we have seen waged globally to really destroy a modern country's economy, and it seems to be working exceptionally well. And I find it, and I don't want to like. I don't want to be misunderstood. I tweeted something over the weekend and I actually deleted it. I thought it might have been misunderstood. I don't delight in anyone's misery. That is not me. I don't take any joy in the misery of the Russian people who have to suffer through this. But at the same time, if their financial suffering shortens toll, the human toll, the toll of injuries and lives that will come from the war, to me that is something to celebrate. That the idea that an economic war can end a shooting war or a hot war is a very fascinating thing that we haven't seen before. Um, and it seems like Putin has lost the narrative and is losing support in a public way again that we haven't seen before, right? So you have celebrities in Russia who are coming out against the war, and you have businessmen and oligarchs who are coming out against the war because they're getting hit
Right.
by these economic sanctions, and so that has not happened before, and it provides this sort of faint glimmer of hope that maybe this won't end in the destruction of Ukraine. Because now, I mean, I'm just an amateur who dabbles in geopolitics, but now if you look at it, like Putin has no out, right? There's no victory here. His hope of coming in quickly and taking over the country and installing a regime that would be friendly to him is gone, right? There is no way that Ukrainian people will ever accept that. It will be nonstop guerrilla warfare and insurgency from here on out if he were to, let's say, take Kiev and install, another president.
Seems like a
So
Russian Vietnam kind of.
yeah, there's no winning, and
Yeah.
and so you hope that he can recognize that and pull out and take the L, but that's obviously not going to happen, right? He's not
Yeah.
the kind of person who can do that. So we need social upheaval in Russia to end this, and we need him. We need regime. I'm not saying that we need to go in and effect regime change, but the Russian people need to rise up
Right.
and fix this because that's the only thing, and so maybe this is one of those things that will help to do that.
Yeah, this is definitely going to be a footnote in history for more than just history on war, but you're going to see a lot of mentionings of how society and economies and you name it
I
have been
mean,
affected.
yeah, I love history. I'm a student of history. I'm obsessed with it. I read a lot of it. I'm especially obsessed with military history
Hmm.
and both ancient and modern. And so, living through history is always one of the most fascinating things to me and trying to just absorb it and take it in as much as possible. And being so fortunate to not be in an Eastern European country right now, I can
Right.
do that. But
Right. Right.
this is quite unprecedented that we have taken all of our modern tools of commerce and finance and directed them at a single country like this that is so dependent on outside economics. I'd like to see us do the same with gas and oil with them,
Right.
and I'd like the West to accept that we're going to sacrifice and have economic pain in order to try and end this more quickly. I think that's my only source of frustration is that we're still allowing energy payments to go to Russia, which makes no sense to me. But I get it. But politicians, should level with people. They should go out there and say, "We're going to sacrifice. It's time."
Right.
You tweet a lot about helping Ukraine.
Yeah.
It's time that we're going
Yeah.
to feel a little pain and we're going to help people not die.
Yeah.
Uh, you know,
Yeah. I saw you were chatting with Ben Hunt from Epsilon Theory about kind of this new not new, but this really eccentric approach to liquidity as a central bank. I thought your thoughts were really interesting on that. My only gripe is, you kind of see this decadence in liquidity that's been going on for a while, pretty much ever since
Sure.
the COVID recovery and blah blah blah. V-shaped
I
recoveries
mean,
and all
I
that.
tried to be explicit. I'm like regardless of what you think about the
Yeah.
Fed and
Yeah.
the emergency measures that have been in place almost since 2008, this is the point of a central bank.
Right.
This week, this prevent contagion, make sure that markets function. And so far, they're doing a bang-up job, right? It's hard to argue with it.
Yeah.
I get that there are all sorts of other systemic and corruption issues, and you know how I generally feel about those too. So that's not what I'm trying to say, but this is extraordinary, and it's good to see that it's being treated that way.
Right.
From a market mechanics perspective, it's been pretty interesting to watch what Russia has sort of decided to do to combat some of the economic pain that they're feeling right now. With your experience in market structure, what do you think of what they're attempting to do with their markets to sort of stop the pain?
So, I think I guess I don't know today. I think yesterday the stock market was closed.
Down
I don't-
35%.
It moved into Tuesday. Yeah, it moved into Tuesday as well. I remember reading that on Twitter. And they'd
Yeah.
also temporarily blocked short selling within, I believe, a few names, which I find to be interesting. But I haven't lived to see that sort of thing. I saw that and I was like, I saw.
I'm not about invading sovereign nations, but I would agree with that move.
So here's the thing about eliminating short selling. And sorry, I've got a friend who joined me who was going to bark otherwise. This
I
is
got a
Mutt.
cat. I get it.
This is Mutt. He's the best. And he's from the mean streets of New Jersey. So the thing about stopping short selling is it doesn't work. It didn't work in 2008. The banks kept falling. It didn't work when Europe tried it. There have been studies that have gone both ways. Some show that it doesn't work to the extent that it can have the opposite effect. It can accelerate moves down, or at the very least, it can increase volatility and degrade market quality. And other studies have shown it actually just has no effect. Look, I will always say this. I think short selling is a critical function of markets. I think markets people need to be able to express an opinion that something is going to drop, and market makers need to be able to short within reason, right? I believe it obviously needs to be regulated.
Do you want to define that function real quick? That's a liquidity thing from what I understand, but do you want to define that necessity?
You have to be able to provide liquidity, right? And if people are coming in and buying and buying and buying, and you run out of inventory to sell them, you should be able to short in order to continue to provide two-sided markets and continue to provide liquidity on a temporary basis, right? That's the thought of how markets are supposed to work,
right?
And have worked for sort of since the dawn of like you can go back to like the olive oil trade in ancient Greece and find examples of this. So it's shorting per se is not the problem. The problem is when markets are too fragile to absorb volatility, or when shorting gets out of hand and you have the creation of these phantom or synthetic shares, or you get extremely leverage and it's unchecked leverage, and
right.
the issues that we've all talked about for a while. There are issues around shorting, but the basic mechanic of shorting in order to facilitate trading and price discovery, I think, is an important one. And usually when a market goes to suspend short selling, it's because there's such a massive problem that's happening, such a dislocation, that prohibition signals to participants, whoa, shit's even worse than we thought. So we better go sell everything that we have.
Right.
And so that's why it can accelerate selling, and it doesn't do the trick. So
I feel like people also don't quite this took me forever to grasp the concept of, but when you have open short positions in markets, that acts as a shock absorber to any downward pressure. It actually can mitigate volatility, given the right conditions that it was done,
that's
in a
right.
in a legitimate manner.
That's right. Yeah. I think it's a very important function of markets. I think that what you're seeing though in Russia is you're seeing them restrict everything they possibly can. So they're trying to keep people from, they're trying to keep Western companies from selling their stakes in Russian companies. They're trying to prevent people from selling short on the stock exchange. There's talk about making the ruble, what is it, inconvertible, so no longer convert it to foreign currencies, which is a necessity when the central bank is now sanctioned and has no access to the foreign currency reserves that it's built up to protect against this exact situation. So the sanctioning of the Russian central bank was probably the most significant move so far in this, financial and economic war.
I think my favorite part is that some official from Russia had said that liquidity would be uninterrupted for the ruble, and yet you hear all this happening. It's like, well, you can't convert it, right? You can't. Well, you can't sell any of the assets either.
Exactly.
Well, actually, we're getting calls from everyone else saying actually we're having our assets seized and frozen.
Yeah,
but we're good. We're good. The ruble, don't worry about it. We're good.
Ruble, don't worry. Yeah, and for them to maintain it, and if you saw, like, the ruble bounced pretty significantly today, and that's probably from the Russian central bank intervening in currency markets, and so they are buying huge amounts of rubles in order to maintain, some semblance of rationality in their markets. And in doing so, they're going to exhaust their foreign currency reserves, exhaust potentially their gold reserves. And they can only do that for so long, and it's not very long at that.
Give me like 20 seconds. My cat's biting my kneecaps right now. I'm gonna put him in my room. Titan, you're being a dick. Say goodbye, buddy. God, you're not nice sometimes.
See a bitch. I don't understand how, you always have, any civilized group, you're going to have a leader or leaders maintain as much order and process as possible. But when you see this circumnavigating of respect for market mechanics and the way that things are just supposed to work, in this case, we have our own country and the whole inflation thing that is no longer transitory because we don't use that word anymore. But
I am, by the way, you're not going to like to hear it. I'm team transitory. I think that this inflation is transitory.
I know. Astro, I had the same reaction. He told me that on my channel not that long ago.
Let me put it this way.
I remain team transitory.
It's an interesting theory. I think you should talk about it. You should talk about it again. Let's hear it.
Yeah, I mean, I think a lot of the current inflation that we're seeing is supply side, not demand side. And so the supply side is that we've got serious supply chain issues, which will resolve. The companies still have significant pricing power. And so it's not like inflation is eating away at corporate profits. And from a wage perspective, you're seeing wage growth commensurate with inflation. So, there's a lot of reasons to look at the details. And then when you dig into the numbers, certainly, like, used cars is one of the biggest determinants that's driving our current CPI. Now, you might say, well, that's a bullshit number because CPI doesn't reflect the appropriate goods and services that people are consuming. Sure, there are arguments to be made, but I think when you dig into it, the biggest support for an argument like that is on the real estate side, where rental costs in real estate have become so expensive, and that's again a supply side issue where there's not enough supply of rentals and real estate. But that's the kind of thing that will get fixed, and that's the kind of thing that markets will address. So I think I think that the last inflation reading from the people who I read that I respect, they are all generally of the consensus that that was the peak, and now we're going to start to see readings that are lower and lower as the system kind of works its way through. Now, that was before the war, right, which is going to now throw a wrench in that, especially on the energy cost side. I still think that when you sort of pick apart all the numbers and the causes, that you can still make a pretty good argument that it's transitory, even if transitory, it feels a bit longer than what you might have wanted to see. But again, like transitory can mean a couple years. What it means, though, is that it's not a structural sort of regime change, and I don't believe that it is.
Do you think there's risk of an overcorrection on the supply side that could ultimately lead to sort of the other side of things, maybe deflation? I've seen some talks of that back and forth, and it's a perspective that seems at least possible in some way, shape, or form. And if history has taught me anything, it's that it's happened. The overreaction to supply side issues, and I guess that comes down to sort of a lot of moving factors. But what do you think of that?
I think that I don't think that's going to happen. I think, yeah, it's certainly possible. But if real estate and used cars are basically the biggest drivers of inflation, and soon energy
Right.
will be as well. Energy is the kind of thing that fluctuates over time, and we've sort of gotten used to that. And so I'm not too concerned about that. Real estate, it's hard to see unless there's a pretty significant crash that, an oversupply issue.
Yellow card. We can't say that word. Can't say the word crash.
But I'm talking like a 2008 style real estate crash. Uh-oh, the referee's here. Which I hope we're not going to see. Up here in Canada, we're getting, the numbers are pretty intensely overheated. But just because the pricing of real estate is overheated doesn't mean that we're going to run into the collateralization issues that triggered 2008. And so, if the protections that have been put in place for that work, then yes, there might be a correction in the market, but not a crash. So no, I think the only thing maybe is going to be used cars, where, for example, like our car was a leased car. We hardly drove it during COVID, so we didn't really rack up many miles on it. And our lease ended, and we're like, of course we're buying out the lease, and I'm just going to go sell it, and make the spread
Yeah.
on it, right? Because the used cars are worth such a premium right now.
My roommate Alpaca, he bought a WRX maybe 4 or 5 months ago, and he paid what you'd expect for a new WRX. And he's been looking into trading it in because the used car market's so crazy. And he'd profit right now about $5,000
It's
having
so
owned the
crazy,
car
right?
for like 5 months. And he's got
Yeah.
10,000 miles on it. He's drove it, not a ton, but 10,000 miles, and you're making money on your car. I mean, I've never heard
Yeah,
of that.
in
That
five
sounds
months,
insane.
that's
Yeah.
it's
Like
all
a used
very
car
crazy.
market would look like a crypto chart.
Yeah, it's basically Dogecoin, man. It doesn't even make sense.
That's
Crazy. It's crazy stuff. So here's sort of a good way to pivot, right? Moving into the US markets, it's very obvious that I would say you're an activist in terms of market mechanics and transparency, and you try to fight for ultimately a more competitive market that's not built in a way to benefit just the people at the top and not necessarily those who are trying to participate. With that being said, there's obviously some issues that you stand for. The SEC's been kind of dabbling and getting a little more vocal in terms of some changes that they'd like to see. One that I find interesting is they've been starting to talk about shorting and short transparency. And as you've mentioned before, I'm on the same side as you. I think shorting is important as long as done ethically. There's unethical shorts, there's unethical longs, there's pump and dump longs. A lot of people forget to talk about that.
Sure.
But what do you think of sort of where the SEC is moving? I remember the last time we talked, there were some things that you were hoping you'd see. Have those boxes sort of been checked? Do you think those are still on the table? Where do you kind of see market mechanics and transparency moving with the things that have been happening in the past month or two?
Yeah, I think I guess, yeah, I haven't really thought about it, but I guess you could consider me sort of an activist. I've been pushing for regulatory and legislative changes for a long time now. And uniquely, none of them affect me in any way other than the way markets and market mechanics affect all of us, which I believe they do, right? And so I've always thought it's important to focus on issues that I care about and to be as methodical and careful as I can to be right on the issues, but then to push hard for them. So that's what I'm really excited to talk about, obviously today, and we can get into that in a
Definitely.
bit. But yeah, I think that the transparency initiatives coming out of the SEC are super exciting and interesting. There's this securities loan disclosure proposal, which was just reopened for comment. So it got a ton of comments. The SEC has reopened it. I haven't yet read all of that, but I'm going to. And then there's this new short disclosure proposal from the SEC to expand 13Fs that I tweeted about on Friday, and then got a response from Elon Musk, which
I gotta
was
say, Dave,
something.
that had to be the peak, the pinnacle
We're in the end
of your
game. We're in the
life.
end
That
game.
had to
Yeah.
have felt so cool.
Yeah.
I mean, he's been there. I'm sure he feels the exact same way that you do about some of the happenings in the market. You know, he's a very
You know,
intelligent guy.
I've got thoughts on Elon, and I'm not gonna say that I'm his biggest fan or anything. But I will say this: when it comes to shorting, I think he and I fall on the same side. There are lots of issues where we don't, but in terms of shorting, yes, I think that Tesla was a big target. I think he recognized that. Now, I'm not going to speak to the merits of Tesla or how crazy or not its
Sure.
valuation might be, but you can look at, did he battle the shorts? Yes. And did he appear to win? Certainly. So, that's been a fascinating thing to watch, and especially in the context of other things that I've looked at in which, the issuing companies were not as successful at battling off, attacks that may or may not have been warranted. So, the him tweeting to me was crazy. It actually made Twitter quite unusable for a couple of days. it was crazy. Um, but I do think that the new proposal is promising. I really have to go through it in detail, and that's something that I'm going to be doing soon. Between that and the securities loan uh, proposal, and we're going to be really focusing on those two issues as well as payment for order flow as we bring out this new advocacy effort that we're launching today.
So you were talking about the securities lending, deal details, right? And then you have the 13Fs, which are quarterly filings. What do you think is really missing? Like, what would fill in the gaps to satisfy your own, degree of completion in terms of, what reporting metrics are required and intervallically, what do you think, if you could have an ideal, set of new rules, what would those be?
Mm-hmm. So I've got sort of two ways of approaching this. One is the things that I want to see that we're pushing on today, and those are going to be on our website that we can talk about in just a bit. And then some of these things are sort of mechanical changes that I think markets need, and those will take longer. Those will be, pretty sort of long, drawn out battles to sort of change the nature of how accounts are maintained. The someone who I'm working with on this initiative told me it's kind of crazy that in 2022 securities are still being held in street name. Why is that? Why aren't securities by default directly registered with the company? Why isn't there? And that's for many reasons. One, because of this idea of vote counts and overcounts and the issues that go along with shorting and borrowing. But the other is because people should have a more direct relationship with the companies they're investing in. That's the
Right.
point of markets, right? Some
Right.
people want that. You have traders and you have investors, and investors want, fulsome, substantive relationships with the companies that they are investing in. And I think that's something that our markets should incentivize, right?
I
That's
think they
what we want to
prohibited it
see.
right now. Yeah. No, it's very, very
Absolutely.
backwards in that regard.
Absolutely. So, a couple of so what we've done, maybe there's a good chance to just sort of,
Go, go ahead. Plug it.
describe
Send
what
it.
we're
Plug it.
doing.
Plug it. Go. 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 Go.
So today we're launching what we call the Investor Bill of Rights, and the Investor Bill of Rights is a platform of principles and regulatory reforms that we believe would make markets work better for individual investors. And so the principles that we have settled on are transparency, simplicity, investor choice and control, best execution, and better settlement and clearing. So the platform is focused on those five principles, and within each of them, we have a set of issues that we think individual investors should support and should advocate for. And so this is not us as an organization advocating. This is us trying to help build a grassroots advocacy movement in which individual investors can advocate for themselves, and we can help with that. So, for example, on the transparency side, the lending disclosures that has been reopened for comment, that's a big part of what we want to see. The 13F improvements, that's a big part of what we want to see. But more so than that, the SEC has this authority that's called retrospective review that it never uses. Retrospective review allows the SEC to go back and look at something that has been approved and update it. Why wouldn't you do such a thing, right? Times change, things change, tech changes, markets change, right? So the SEC needs to be more on top of this. So one of the things we're actually trying to do is say, let's not just propose specific changes, but SEC, you have this authority, start to use it. Come on, right? Enough is enough. And we can get into some of the other items that are on the platform, but you ask, in terms of shorting and disclosures, what can we do? And three things, the three issues we're launching with in terms of settlement and clearing are better FTD visibility. So we believe that failure to deliver disclosures should be updated more often.
Red card, can't do that.
Yeah, we're pushing for this, and the great thing I would say is that we have found firms who support us in this. So this isn't just Irvin Finance pushing. We're building a coalition of industry firms that agree with these stances and that are going to help push. And in fact, we've got in our partners, we have Public, we have Paxos, and we have Prodigium Pictures, which is the HBO documentary, the ones producing the HBO documentary, and Proof Trading. Proof Trading is an institutional broker dealer. So it's weird that all four of our launch partners start with P. I don't have an explanation for it. But if your firm name doesn't start with P, you're still welcome to join this coalition. But Paxos is a particularly interesting one. They're a blockchain-based settlement and clearing technology platform who applied to be the first new registered clearing agency in over a decade. And so, the people that we're working with there are the absolute most impressive experts I've ever met on settlement and clearing. They know way more than I do. Right. And so when we talk about how to improve settlement and clearing, and we say we need more visibility on failures, and that includes how and when are they remediated, what type of counterparty is responsible, and is it a clearing broker, an exempt market maker, or custodian, and how long did they remain open? And all of these experts agree that those are serious issues that we should deal with. Right. So Dream on Reddit, these are industry experts who agree that these are issues. They also, and they made suggestions that I hadn't even thought of, like margin transparency. We need visibility into the estimated margin on a per security basis for clearing brokers. We need to know what their exposure is.
Which that was the core of the whole GameStop situation from January. Yeah,
exactly. And so you would have been able to see that your broker or the clearing broker that your broker uses had outsized risk and potentially was going to turn off the buy button. You would have had some warning.
Right.
And then the other thing is netting transparency. We need disclosure of gross versus net notional or share count per security so that you can understand the trading dynamics, right? What is real investment and what is trading activity, right? So this kind of disclosure and visibility would provide a tremendous level of insight into market mechanics that doesn't exist today, and that is clear to me that retail and individual investors are interested in knowing, right? So these are very, as far as disclosures go, these are very reasonable ones. They push the envelope a bit, but it's going to be hard, I think, for the industry to really push back against it. They will, of course, right? And they will push back against everything we do, and that's why we're doing this. And that's why we believe that it is a grassroots advocacy movement that can make these changes. It's an army of individuals to go up against an army of lobbyists, right? And so what we're trying to do is empower individuals to have that same level of knowledge and access as these fancy lobbyists do. And I think that this is the opportunity, and that's why I've said I haven't been as excited about market reform as I am today, because we haven't had that army before.
Can I highlight something real quick?
Yeah.
And you run with it?
Sure.
It comes down to the value of data, I think. And when you have markets that all operate off of money, right? There's a lot at stake when it comes to what data is available, because that's where you're actually gaining advantage and insight. That's your exclusivity that lets you have the edge, whether it's the speed at which you get quotes or the speed at which you can submit and execute trades. It stems much further than that. So even just reporting intervals, right? The fact that it takes a month for retail to get access to failure to deliver data is preposterous. And if you could imagine what that would be like on a per day, settlement basis, where it's like, here's how many fails were today. Not only do you have better tracking, but you have better awareness, and you can start to define the patterns to everything of what's going on, and you can catch the problems before they happen. But, as that's not quite something that I think the people who run the charade want to have happen, because that kind of ruins the fun for them.
Yeah, I think that there are some very powerful interests that push back against these changes and win, those arguments year after year after year. And part of that is that they can stand here and claim that they represent individual investors and retail investors, and they have year after year after year. And I think one of the most important things we can do is change that narrative, that you don't need to represent individual investors, because they're here to represent themselves, and they're empowered, and they understand these issues, right? Because if you understand the issues and you have a reasoned viewpoint, and you make that point in a comment letter or a phone call to Congress, or you sign that petition, that's gonna make a difference. And I think that this is the very beginning of what I hope is an organized effort, to take that spear tip and really focus it on the specific areas that we want to improve, and to show that there's popular understanding and interest in these issues.
Well, that's really the big difference between this, last 18 months or so and the previous 10 years, is people just don't know what they don't know. And I don't think there's really ever been this much interest in the markets as there is right now with retail investors. I mean, some of that was caused by, stimulus that's been given out by the Fed or whatever, but the means isn't as important as the ends. And that comes down to people understand now that they're kind of getting their cheeks clapped, I mean, that's what it comes down to.
I just dropped the whistle. How dare you say that? You would have gotten a red card for that.
That's what it is, though. That's what it is. You just, people just didn't know what was happening. They were like, well, this is just how things are, whatever. Yeah. And right. I think there's just no better way to capitalize what you're talking about than people just didn't know, and now they know that there's a discrepancy between data availability to retail investors and institutional investors and market makers. I mean, it's just preposterous for me to think for a second that these guys literally can do it, but won't do it. And why? What's the reasoning behind that? You can't say it's because people don't understand it. I mean, people can learn anything. I don't know. It's crazy to me. So
I mean, that's been the most wild part of this to me this entire time, is suddenly so many people care about market structure. They don't, it's not just that they're interested in markets and want to buy some stock. They want to understand, what does it mean to buy that stock? How do I know that when I buy that stock, I'm getting the best price for it? And how do I know that when I buy that stock, I am actually receiving shares of it and not some IOU or ledger entry, right? And I think that now that people understand and care, we can turn that into a concerted effort to reform markets, so that you can be sure and you can trust that it's working the way you would expect and want it to work. And Gensler has talked many times about trust in markets and how he's concerned that it's waning, and that this is one of those efforts, I think, that where we can help to restore that. And I think trust in markets is critical to a functioning capitalist system. There's very little as important as that. And so, I'm just so thrilled to be a part of this and to help in whatever way I can.
Do you think that there's such thing as fixing markets too fast? Because, there's this game of cat and mouse in the background, right? And I would agree to that point, but there's this game of cat and mouse between, those who enforce rules and laws and those who are trying to break them, right? And it's these two forces that keep the world going round. But, we've kind of it feels as though there's tons of complacency and this level of complicity. That's the word, from those who are supposed to be protecting markets and et cetera, et cetera. How do you think that there could be, too much acceleration into remedying, market structure?
I don't think you want regulators to change the rules quickly. I know it's frustrating, especially when you see one that you think is so plainly wrong and the fix is so obvious. And I share that frustration. Believe me, I've been pushing to update disclosure rules for 11 years now, things that should not be controversial in the least, and yet they haven't all happened. Um, at the same time, there is always unintended consequences to regulatory action. And so I do think that the process we have is important, that rules are proposed, that the public is given an opportunity to comment, and industry is given an opportunity to comment. And industry is an important voice in all of this because they know these issues better than anyone. And even if they're biased and even if they're coming in to protect their own interests, you know that, and regulators
Right.
know that when they read these letters. And yet there's still some very important information that can come from them. And, I've had my mind changed on issues from a firm that I could not have agreed with less. And yet they pointed out something that was very reasonable and a change that needed to be made. So I think that you need that kind of process. I think, however, that one of the biggest problems in regulation is the composition of the regulator. And if you have, a regulator in the SEC that's 80% lawyers, in modern electronic markets that move at microseconds, and you have few technologists, you have few data scientists, you have few engineers, you have few traders, it's all lawyers. And that has made sense historically, and I don't think it makes sense anymore. So I would like to see, what you're asking is an issue that I've spent actually a lot of time thinking about because I describe markets as complex systems. I'm not alone in that. That's not, great insight on my part, but I believe they are complex systems. That doesn't mean complicated. It means complex. Complex is a very specific term to understand systems that are self-organized, that are evolutionary, that lead to feedback loops,
Right.
and so, it's
It's a giant piece of code.
important. Yes, and you don't know how things interact. You don't know how algorithms interact. You
Mm.
can't model that, right? But it's important that regulators can co-evolve with these complex systems. That's the term I found to be the most compelling in the literature that I read about, the philosophy of regulating complex industries.
Right.
And so, I don't think regulators have figured that out yet. And I think that's the biggest failing. If they were sort of data centric and data science oriented, I think that we would have much better outcomes.
Right.
And part of that is a funding issue, and part of that is a staff composition issue, and part of it is a will issue, right? If you're going through the regulatory revolving door, like the head of the data science program at the SEC, who left to go work at Citadel, that sucked.
Hmm.
That yeah,
Interesting.
that right. So, that happens regularly, and that's nuts, right?
Yeah.
So you should have an environment in which people want to stay and are compensated to stay, and you want to build a regulator that just functions and works better.
Do you think this is kind of a devil's advocate thought here, but it's fascinating to me. Do you think if there are new rules and regulations that come out with the market, right, we're successful, hypothetically speaking, and we're able to make changes in all the different data points that we spoke about, and it pokes some holes in some market makers' way of life, and all of a sudden you have liquidity problems, and eventually I think this is the idea of things moving too fast, perhaps. But my thought would be as frustrating as Citadel and Virtu are, being the duopoly of market makers that they are, without them, the liquidity of the stock market would surely have problems. I mean, if there wasn't somebody there to replace them, what does that kind of look like in your head? I mean, how long do you think it would truly take to be able to successfully transition in a way that allows markets to be more competitive and for other market makers to sort of be born into the current system?
So the market makers, quote unquote, are there. Um, the high speed speculators are ready to go. They are
Just inches away from the
Sure.
MISE.
Yeah. Of
you
course.
know,
Of course.
so you can look at other markets that don't have 45% off exchange volume and don't have payment for order flow and retail internalization, and many of them function better than US markets in terms of market quality after you adjust for company size. So in my mind, I think you're right, Trey, in that you don't want to just address one issue. You don't want to just say no more off exchange trading of retail orders. That's not a winning fix, because you're then going to throw all of that volume onto expensive stock exchanges that are still extremely fragmented. And while it will improve things to a certain extent, it might not improve them enough to offset the problem. So I think that the bare minimum is that you need a couple of changes that go together. One of those is, let's say the new best execution standard is order by order. That's an important first step, so that every order has to get best execution, not just the aggregate of orders. That's step one. Step two is to say, okay, we need fewer venues. Straight up, we need fewer dark pools, we need fewer exchanges, we need fewer venues, we need to defragment the markets. Step three is to say we need to end inducements to order routing that aren't based on execution quality, and that's payment for order flow and exchange rebates, right? So if you start to do those things, then you would have all of this order flow coming onto fewer, hopefully transparent lit venues like exchanges, and you would have huge competition over that order flow. And so I think at that point, you would end up with way more smaller trading firms rather than just a couple of giant ones. You would have, I hate to use the term, but it would be more anti-fragile. Okay, don't quote me on
Where's the
quoting
whistle?
Taleb.
Where's the
Yeah, blow that. He blocked me on Twitter.
Really?
Yeah. I don't think much of Taleb. He blocked me, and because I called him out for being a jerk. So, but I stand with Cliff Asness on that. I don't know if you know Cliff. He's the CEO of AQR, but he blocked both of us at the same time. It was great. So anyway, but no, for real, like it would be a more resilient system. It would be a system that leads to better outcomes for individual retail orders and for institutional traders, which is important and should be important for all of retail, because most of retail wealth is in ETFs and mutual funds, and you want to make sure that the institutions are having a good experience. So I don't think that if you made Citadel and Virtu go away in a vacuum, it would be a good outcome. I think there's too much power and liquidity wrapped up in those two firms. But I do think that if you couple it with a couple of changes, you would force them to compete on a level playing field. And you know what? If they are so good at what they do, they'll still win. They'll still be,
fine, right?
providing
Yeah.
incredible execution quality. So good, let them compete. It's okay. I don't think they will, but let them compete with 100 other firms instead of each other, and I think you'd have much better outcomes.
Careful, you're sounding too rational.
I know. I speak of open competition and transparency, and because I'm a capitalist.
Yeah, right. Well, the way that I've kind of put my own little interpretation to this entire thing together, because I've only, studied markets for about a year now, and I didn't realize that there is, and I'm using this term very, very, very loosely, and I don't want anyone to conflate this with anything else that would be ambiguous with it. But you have a secondary market that all has to do with market making, whether that's the way that rebates are distributed across different exchanges, or the way that, if you can acquire enough inventory and wholesale it for, however much less or more for someone that you're anticipating to have a demand for, et cetera, et cetera. It ultimately dilutes price discovery. And I think that, it sounds very minute, even if it is a penny or half a penny or however, nitty gritty you want to get with it. But it's all about those iterations over time that ultimately lead to true value based on what the market believes. And when you start bulking things together and wholesaling and aggregating, and you're taking everything and making it this giant piece of liquidity, it's great. It's going to be amazing. Don't worry. It's not going to bite us in the ass until the clearinghouse calls the main brokerage that retail is using, but bear with us. I didn't realize it like that, where there is this nested layer that is a part of the engine for what everybody's
Yeah.
participating in.
Yeah. Yeah.
Do you have any other kind of like tidbits that would fall into that realization other than rebates? Like what are the incentives for reform or changes to happen at that level?
I think that when you pull an order off exchange, or when you execute a trade off exchange, you're damaging the exchange. You're damaging the lit market, and you need to compensate for that. And so the compensation needs to be a material amount of price improvement to that order. That's how Canada does it, for example, which is a rule that I think is very elegant. And
Can you
the
define
one
price improvement real quick? Because that's a very important term. I just want to make sure everyone.
It is, and
Yeah.
and part of what we're talking about when we talk about best execution is that you need to better define the NBBO as well. But today, price improvement means, if you go to buy something, how much less than the offer did your trade execute at,
Right.
the NBBO, and if it's, you can see in the study that I ran on payment for order flow and off exchange trading, that something like, I don't remember it's a third of all trades have less than a tenth of a penny of price improvement, and most a plurality of trades, the most common amount of price improvement is 1 mil per share. So that's 1 penny per 100 shares that are traded. And so to me, that is not material price improvement. That is not compensating for the damage being done to the price discovery process. And it's simply gaming statistics so
Right.
that brokers can say 95% of our orders receive price improvement, without actually mentioning that 28% of them get like 2 mils.
And that's the translate, like the English version of that, we'll call it. Like the reason why that is such a disgrace is that the further away you are from NBBO and that ultimate version of price improved accounts for the spread, and the spreads are where you're finding profits being generated out the wazoo by.
That's right. That's right. And so we see that, the internalizers are capturing a huge amount of the spread and retail is getting very little. And
Right.
we want to change that. I think that this is the time to get involved and to get active. And we haven't had this kind of opportunity before. And so, what we've done is we put the site up at irvin.finance/advocacy, and you can read the Bill of Rights. You can sign up to join the movement. You can call a member of Congress and talk about payment for order flow and why you think it needs to be ended. And you can learn how to write a comment letter. And then we're going to focus efforts on the proposals that we think that people should be commenting on, and we'll teach you as much as we can and tell you what we think. But in the end, it should be individuals writing comment letters and expressing their beliefs.
That's awesome.
Oh yeah, man.
Awesome.
Damn,
Thanks.
This
guys.
is so cool. It's crazy to have that conversation. Dave,
Yeah.
always a blast, man.
Yeah.
Always
so
fun.
much,
Yeah.
man.
Appreciate it, guys.
Thank you so much.
All
Take
right.
it easy.
See ya, Shell.
Right.